Welcome, welcome. This is an update on Dash cryptocurrency, which along with the rest of the crypto sector is experiencing a bit of a sharp pullback at this moment. What I have here is our 2-hour chart, the short-term linear chart for Dash. And you can already see that we have a pretty clear zigzag forming here, just a classic zigzag correction. You'll see with the MACD that we are quite oversold right now, but we're seeing the MACD curl back up, which is a good sign that we're close to the bottom of this correction. Upon closer observation, our patterns haven't changed too much since our last update, in which we were describing this entire rally up to about August 22nd to be a 5-wave impulse. And then we had a long and deep correction in a classic C wave for what I was calling our wave 2. And ever since then, we were looking for a micro 1-2 up, and we may have it. It's not the cleanest pattern, just like with a lot of other altcoins. This would count best as a leading diagonal, in which you have a lot of undulation, a lot of up and down, and the whole pattern would fit inside a trend line, as you see here. So it's not clear if this really is a diagonal. I would like to call this top here a third wave. It would fit best when you look at this pattern here as a 1-2. This is the 1-2 that we had last update, and our current pullback would be a wave 4 with higher to go in a 5th wave to complete this larger wave 1 leading diagonal. That would be my preferred pattern, but you can't fight price. The market does what the market wants. The alternate pattern here is that we actually didn't complete our wave 2 correction from the top back here, and that is what I have marked in orange right here. We have an A wave pullback. That was our bottom on September 28th, and this entire rally would be a fake out rally or a corrective rally in the form of a B wave. This ugly choppiness up to this point does give that pattern some credibility, and that would call for us to drop to a lower low all the way down here. 108 would be a probable target, somewhere in the low 100s range, and this would not be out of the realm of possibility because we've seen exactly this kind of thing happen in Cardano and Ethereum Classic and a couple of other altcoins, in which we had a lower low struck since our initial low back at the end of September. So for right now, those are the two patterns in operation. If you're looking to buy a lump sum, just like with some of the other altcoins, we have dipped so far down that it is a decent time to buy a lump sum right now. But as price rises, risk rises as well. So our preferable method for buying as the rally continues will be to dollar cost average, which is of course buying a little bit at a time regularly over time, in order to minimize the chance that you inadvertently keep buying peaks due to emotional attachment. For our purple pattern to hold up, I would like us to hold a 170 support just as before. However, our ultimate support for the purple pattern would be 146 because in Elliott wave theory, you can, by the textbook, retrace 100% of wave 1. So that's a possibility. If we break both of those convincingly, that gives you a strong hint that we are following the orange pattern, in which we are calling for a lower low for our wave 2. On our big picture, I've made a bunch of changes to clarify what we have here, and I've divided things into two patterns. And of course, this is the logarithmic chart. And when we look at the MACD, you'll see that we are not particularly overbought, especially with the recent pullback. It's really reset our sentiment. The first thing I'd like to note here is that this is the big picture impulsive rally that I identified in previous updates, followed by the sharp drop that I have been calling a wave 2. And then you have our bigger 1-2 right here. And I've actually marked our smaller nested 1-2 right here. So this could be our leading diagonal. It may be done. It may not be. It actually looks much prettier in the logarithmic chart than it does on our linear chart. It looks more convincingly impulsive, but regardless, whether we follow that orange alt pattern, go a bit lower, or we're done with the correction, the big picture targets remain similar. So with that being said, we have our purple as our primary pattern. And based on the 1-2s that we have at this moment, our targets are still sitting at 602 to 765 for our third wave. And I have lowered the upper targets because I've actually made the higher targets a part of our alternate green pattern, which I will go over momentarily. So once again, 602 to 765, and hitting 602 would be more than a 3x return from where we are right now, just for the third wave alone. Expect a lengthy and slow sideways fourth wave correction, because that's how fourth waves are. They take a long time, and expect that to take longer than our wave 2 pullback that we had, which seemed like it was taking forever. Expect possibly multiple months. We'll see if we can hold support on that around the 300 to 400 range. Our ultimate top is projecting to 888 to 1128. Those are standard Fibonacci pinball Elliott wave targets. Getting to the lower end of that box at 888 would give us a nearly 5x return from where we are. That is the purple pattern. The green pattern is quite a bit more bullish, and the reason I have divided these patterns out is because our current 1-2 setup does give the purple structure more of an edge. These are the standard targets that we would expect, but with a lot of altcoins, Dash also has the habit of procrastinating, in which you have really slow, unimpressive rallies to start off the structure, followed by blow-offs blow-offs at the end. So you never know if we're seeing the same kind of thing here, as Elliott waves are fractal in nature. If we are following a more bullish green pattern, then our third wave is targeting between 757 and 1406, and those have strong Fibonacci confluence at various degrees of this larger pattern, which I'm not going to dig into the details of, but this entire green box covers all those, and getting anywhere near that would be quite a return just for the third wave alone. And if history is any indication, you have a fourth wave that may cut pretty deep, and then you have a blow off to finish off our fifth wave, which would target somewhere between 1128, which is the upper target range of our standard targets, all the way up as high as 3107. Getting to 1406 would give us a 7.5x return from where we are, and that is a strong point of confluence when we look at the big picture target. That's the 1.0 extension of this larger 1-2, and would be a very probable top for a third wave within this entire structure. However, as I mentioned, we do have confluences higher up. 2612 would be the next major resistance, and therefore if we get to that point, that would be over a 13x return from where we are. So a lot of incredible potential for Dash. If we have any signs of the green pattern coming to life, we may have some incredible outperformance within Dash. Now, what happens at this top? Well, this top, of course, would coincide with the major top in Bitcoin and Ethereum, which would be punctuating a nearly decade-long bull cycle with possibly a multi-year bear market. Look for a major wave 2 crash in your OG cryptocurrencies, Bitcoin and Ethereum. We will likely see quite a crash across the entire crypto sector, with Dash being no exception. So that would likely be a very good time to take profit and reallocate into other asset classes or even stable coins. We have a ways to go before we get to that point. The interesting thing here is, like with other altcoins, this is not expected to be a wave 2 pullback. So it'll be deep, it'll be ugly and hideous, but this would be a wave 4 pullback in either pattern. And wave 4s, again, they take forever, but they don't go as deep. We don't expect this to be a meteoric crash like we saw after the 2018 crash in altcoins. Once this happens, you'll have a buying opportunity here in not just Dash, but various other cryptocurrencies, especially altcoins. And while Bitcoin and Ethereum may be in a prolonged bear market, we will very likely see some kind of a B wave corrective bounce in those major cryptocurrencies. The altcoins may be hitting their all-time highs there. So it would be entirely possible that we have Bitcoin and Ethereum rally in some really choppy corrective fashion, while coins like Dash or various other altcoins, they may blow off into their eventual fifth wave or whatever their next target would be. We may see some great outperformance in a lot of altcoins such as Dash or Chainlink, Polkadot, or various other cryptos that I have been tracking within my analyses. So in short, we are pulling back. Nothing particularly bearish at the moment, no matter how much of a gut punch this pullback may be feeling like. And there is great opportunity even after this bull cycle ends, as we may be setting up for a colossal buying opportunity during the back half of 2022 into 2023. If you've enjoyed my content, don't forget to like and please subscribe for continuing updates on Dash as well as various other cryptocurrencies. Until next time, thank you for watching and happy trading.